call the Finance Committee meeting to order. This is the Finance Committee meeting for Wednesday, December 20th. Are there any public comments?
No.
All right, none. We'll move to the approval session. First one is minutes from the November 15th, 2023 Finance Committee meeting.
I'll make a motion to approve the minutes.
All right, I'll second the motion. All those in favor? All right, item number 2, change order number 2, the AMI meter replacement project. Ms. Roberts, thank you.
Thank you, Commissioner Cook. I appreciate the opportunity. Commissioner Watson, I'll give the abbreviated version that I gave from the Facilities Committee because our other two commissioners have already had the pleasure of hearing my update. But basically what you have before you is our closeout change order for the Delta Municipal Supply contract for the AMI meter changeout. This particular changeout is a credit changeout in the amount of $1,557,102.12. I've listed some highlights from the project there for you in the staff report section. I'll touch on those briefly. During the pilot phase of the project, we did install 250 meters. That was during December of 2020. Moved on to full installations beginning in January of 2021. During that particular time, we also placed the collectors on some of our assets, and then we even actually installed 2 new poles that we used for antenna installation. At that particular point, we did take a pause on the installations because we had discovered what we call these yoke bar installations within our system. The yoke bars created some unique installation challenges for us, so what we did was we actually asked the contractor to go out and do a full system audit for us. Go box to box, see what it was that we needed in order to do a full change out at that particular address. They came back with that information for us, as well as a request for a change order. That change order was approved by the board in November 2021. Once we received that change order, we did go ahead and order all of the remaining inventory that was projected to be needed for this particular project. We did avoid at least one 30% price increase. There was another one coming behind that, so we knew that we needed to move quickly. Took a little bit of a chance ordering that much inventory, but we realized that the gamble had actually paid off when we were still receiving shipments in November of 2022. So we were able to continue with work without interruption as a result of that choice. During that time, we also had several training sessions, both here in the offices for the administrative staff and then also in the field. We had personnel come from Neptune, which is the meter manufacturing company, taught us how to use the dashboard as well as physical installation of the meters themselves. This past Tuesday, December 12th, we had a celebratory luncheon where we came together and looked at a few highlights from the particular project. I joke that not only were we all still talking to each other, but our partners were willing to buy us lunch that particular day, so they provided a nice luncheon for us here in the Commission chambers, and we certainly enjoyed that. Now for the business portion of that, page 2 of your memo shows the breakdown of the closeout change order. I won't go into those in any specific details unless you do have questions, but this change order would bring the final agreement amount to $15,835,973.68, which is well below the $18,200,000 that we had projected to borrow from GFA for this project.
Questions? You know, this project went very well, and I think one of the key things that we take away is that not only under the billing people, but also all the people that work in the field, that the data that we're gathering from this installation in this project is really key to everything at this point. It's so critical. We can keep our customers happy by giving them the information that readily that they need. And we can check our water loss using help us track down things. And I know from the billing department, it's helpful for you too.
Certainly, yes, sir.
You know, in communicating with your customers that they can get that information. So, I think it's a big plus for the organization, and it's a well done project, and one we won't have to do for another 15 years, which is nice. So, all right. Any discussion? Any other discussion? All right. I'll entertain a motion.
I move the Finance Committee recommend the full commission approve change order number 2 as a closeout change order of the Delta Municipal Supply contract for credit amount of $1,557,206.
Finance Committee's recommendation for full approval, right? Okay. All right. All right, I'll second the motion. Any other discussion? All in favor? All right, passes 2-0.
Thank you, Commissioners.
Thank you very much. All right, discussion financial statements.
Good afternoon. Well, for our month ending November 30th, 2023, there weren't any real surprises in our financials. Starting with the balance sheet, current assets, top of page 1. The total current assets decreased a small amount, $39,000, to a net total of $11,017,749. Big pieces of that change: a decrease in cash and cash equivalents of $555,000 to the $2.758 million balance you see there, offset by an increase of $245,000 to our bond sinking fund, which is a normal monthly entry, and an increase of $309,000 on our accounts receivable. That number struck me as interesting because, if memory serves, about this time last year, we saw 300 and some odd thousand coming from the LIWOP program, low-income housing, water and assistance program. That, of course, has been discontinued, and to see that amount, roughly the same amount as an increase of accounts receivable at this time of the year, certainly makes sense. See, our restricted cash accounts, JWC, Joint Water and Sewer Commission reserves increased $568,000 to the $48.27 million. Capital reserves are up from last month by $271,000 to the $12,169,000 balance. The SPLOST, we continue to see the funds coming in each month for that. $255,000 was received in November, and that's been a kind of standard amount. So we're currently at a balance of $2,135,376. Trustee held funds did decrease $390,000 this month to a balance of $9,996,516. That was related to a bond draw for payments on the Dunbar Creek project. Fixed assets. Here's where we see a change that might raise an eyebrow or two, but it was actually normal. What we see for total capital assets, a balance of $178,409,730. That's an increase of $263,000. There was a $939,000 decrease for fixed assets net of depreciation, and a $1.2 million increase to construction in progress this month. It was basically a bit of catching up work, a couple of months, October and November, depreciation and CIP expenses being recorded this month. Those construction in progress funds, that $1.2 million increase, that largely comes from the North Mainland Water Loops project, Dunbar Creek, and portable generators. Total effect on our total net assets. Net assets increased $966.8 thousand to a balance of $267,892,639. Current liabilities. There was a decrease to our current liabilities in total of $629,000. Most of that was in accounts payable, which related to the projects I mentioned that we saw in the construction in progress, our North Main Water Loops, Dunbar Creek, and the generators, basically paying down invoices that we had outstanding for those projects. See. Long-term debt, there was a increase of $337,000 to the long-term portion of GFA loans payable, which put that balance at $25,474,848. That was due to the meter project. There was a payment request on that. Page 2 just finishes up our liability section of the balance sheet. I can say that for the month of November, total liabilities decreased 253,800 for a total liability balance of 81,680,216. See, the bottom half of page 2 is really just kind of a rehash of some of the information above from assets and liabilities. Page 3, our income statement for the month. As of November 30th, the budget is flexed. You'll see the percentages in blue to the left-hand side of the sheet. 44% on revenues, 45.26 on water revenues, debt charges 41.9, and administrative fees 42%. With the budget flexed to those percentages, our revenues year to date ending November 30th, we're showing basically we've received or accrued more revenue than is budgeted so far. The biggest portion of that coming from interest income, which is a combination of interest and fair market value adjustments on our investments. You'll see that currently we're a little bit better than $1 million over what was budgeted in that category. Total effect on operating revenues, we're currently at $17,412,506, which is 1.766 million over budget so far, year to date. Our expenses, of course, the operational expenses are where we're seeing our biggest losses, currently 1.7 million over budget there. Almost wiping out all of our gains, but we have personnel expenses coming in better under budget by 462,000, almost 463. Basically leaves us at a net operating revenue year to date of 5.625 million, which is $581,000 better than our budget. Bad debt expense running higher this year, 232,000, almost 233,000, which gives us a net revenue before capital fees of 589,821, which still sits better than budget by 346,000. Capital improvement fees and the SPLOST.
Back to the bad debt expense.
Sure.
Is there like a cause effect or kind of thing of why it would be up that much?
As our accounts receivable balance goes up and the aging of that goes up, so does the estimation of our bad debt expense and our allowance for bad debt. And so those are the real drivers going on there. If we can get those larger and older balances paid down, things will get more in line. And also, I think just timing at the end of the month, once payments start running in.
Yeah, if you look at it over the long run, it probably wouldn't look that large.
I would agree with that, saying that it will even out.
So if it were annualized, it would look a little bit different.
I believe so, yes.
Right. We eliminated some of the debt, but we still have some out there right now.
It was helping bring it down because the customers that had a lot of those past due accounts were able to get assistance. And unfortunately, what we found, as soon as that assistance amount ran out, they got right back in the same shape they were in.
Right.
Correct. So
There is a bad debt recovery. Does it offset this bad debt expense, or is there another?
it does. We do have a collection agency that we're contracted with, and we hand them our older balances to try and recover. And as that is recovered, that reduces.
It goes to an income line item, not as an offset to this. It's an income line item listed in the other income section of this page.
So basically, the bad debt expense is a contra account, and not really representative of cash moving, but of an estimate based on what we see as the current economic and collections climate.
Thank you.
And, see, capital improvement fees and SPLOST revenue, those are not budgeted, so those are big helpers. But of course, those are restricted funds that are used for specific projects, especially the SPLOST revenues. And currently, year-to-date, capital improvement fees, almost 787,000 have been collected there, and SPLOST revenues of 867,000. Page 4 is the same information on our income statement with expenses broken down by our commission's departments. You can see the department with the biggest expenses, of course, being in wastewater treatment. That is very standard. They are hit, of course, with the very high chemical costs that we incur each year, chlorine and others. Second and third behind wastewater treatment would be water production and water distribution. Systems pumping and maintenance is showing a positive variance to budget of $330,000 right now. And as indicated on the previous page, net operating revenue is doing $581,000 better to budget at the moment.
Can I ask, when we get the UV filters in place, there's going to be a significant savings in chemical costs.
Chemical costs will save us $100,000 or so a year on chemical costs, $120,000 a year. We still have significant chemical costs due to the oxygen being put into the system.
Right, yeah, I understand that.
So that will still be going on. We're trying to get that automated so that we don't waste oxygen. And another thing, a couple things to point out on that, we've been renting bypass pumps for the headworks as backups as we're waiting on those new pumps that we ordered to come in. That runs into substantial money. And then if you recall, we had the wind damage to the building where the generators were at, and we outlaid about $400,000 or $500,000 worth of cash to get that, and we're waiting on our insurance company to take care of that for us. But we've paid out that amount of money.
Those are all built into that section.
All into that section.
All right. Okay. Thank you.
See, on page 5, we see our cash report. Currently, revenue deposit accounts of $2.214 million. It's a good standard working capital balance for us there. General checking, $63,000. Payroll checking account, $445,000. Normally that would be much lower. It's just happened that month end was on a Thursday, payday's on a Friday. so that's you get a more
Right.
realistic picture, deduct that from the
We
total.
routinely just transfer money into that account just before payday, right? And then
Precisely. Operating revenues currently sitting at $8.8 million for operating reserves. I'm sorry, I said revenues, didn't I? Capital reserves sitting at a little over $4 million. 922 of that in an overnight cash and 3.1 in investments. Repair and replacement, 34.4 million. 5.7 in cash, 28,754,000 in investments, and group insurance 928,913, 120,000 in cash, 808,000 in investments. Let's see. Page 6. Our capital improvement fees reserve currently standing at 12 million, 4.1 in overnight cash, almost 8 million in investments. The SPLOST, 2.135 million, all of that currently in overnight cash. We're probably looking at moving some of that, or 2 million of that at least, into investments within the next month. Customer deposit reserves, 2.898 million. 338,000 in overnight cash, 2.56 million in investments. Summary down below of cash and investments, 2.7, bond sinking fund, 1.9 million, elective reserves, 48.2 million. The bond in trustee reserves, 9.996 million, legally restricted reserves, 17.2 million, for a total of 80,150,000. As far as the breakdown of our investments, you see that on page 7. We've been working this year to get, improve our yields on our investments and cash in total. Currently, that has gotten up to 3.42% on our total portfolio. That's cash and investments. The cash and cash equivalents are in money market mutual funds, currently earning almost 5.25%. The fixed income investments, we still have a good number of older investments that are at lower yields, waiting on those to mature and reinvest those in higher yielding investments. But the total fixed income portfolio at the moment is yielding 3.16 million. For our gain and loss on the portfolio, currently that's at a loss of 961,000 as an unrealized loss on investments. That's down from September when I first started providing this sheet. At that time, it was a loss of 1.3 million. So we've picked up fair market value increase of almost $400,000 in 2 months. So definitely the economy and the interest rate environment has been favorable. We do stay in regular contact with Synovus, as well as keeping an eye on market conditions. The Fed, of course, held interest rates steady at their most recent meeting, indicated possible rate cuts coming next year. So we'll be taking all of that into account and making future investment decisions accordingly.
We have a number that are coming due in the early part of next year, so maybe before they start cutting interest rates, we'll get in it.
Yeah. I think we'll be able to make some good shifts before rates start going down again. We work with our Synovus reps, and they basically have a full team knowing our legal restrictions on what and how we can invest. Most everything that we have been investing in as older bonds come due and mature and we get that cash back, it's been U.S. Treasury notes. We've definitely stayed away from the municipal funds that you can see at the bottom, that very small yield investments. Yes. No. Yeah, we can invest in pretty much any state or municipalities. Help out our brothers across the country. But yes, we didn't have any that came due in November. Looks like we've got one that is coming up the very end of this month. No, December 31st. 160,000 shares of a U.S. Treasury that'll mature. We'll get the cash. Is 31st an actual weekday or a weekend day?
Sunday.
31st is Sunday.
So
You get it on Tuesday.
so basically, January 2nd, we'll get that reinvested. and obviously in something better and something earning more than, what is that, 2.26%.
Yeah, I think we'll do better than that for sure.
The remainder of the financial report is, of course, the project report, which I can honestly say I don't have a lot of information on myself, but between our facilities meeting earlier and Andrew and LaDonna's presence, I'm sure if we have any questions on projects, we can address those.
Yes, sir, that's to be completed. But
This year, we've actually spent 5 million on these projects so far, with 18.44 million currently encumbered. So it's yet to be spent, but
The next one to be closed out likely would be the Highway 341 Crispin repairs. We're waiting on final invoicing for striping. Once we get that final invoicing and get that paid, we'll close that project out and capitalize that.
one thing I did note on the capital report from earlier discussions today, the numbers that we see for the meter replacement project is not taking into account the credit that Ms. Roberts spoke of earlier today. Which shows, total expenditures of over 17 million, I believe our earlier calculation in the facilities meeting said that would come down to roughly 15, 16
Right.
million, somewhere in that range.
You won't do that until it actually posts, until it's. Any other questions?
Thank you very much.
Thank you very much, appreciate it. So,
And Merry Christmas.
thank you, thank you. All right, any other discussion items?